Welcome back, value investors. Today we're going to look at Amazon. This is an awesome company that went from selling books online to really commanding leadership position in several categories online, including AWS, which is providing infrastructure to companies that want to run applications, websites, do artificial intelligence, you name it. AWS is the leader in infrastructure as a service. And Amazon, it seems like in any business they enter, they really enter to really take leadership position. So it's really impressive what they've done. They are a very good, big company, diversified in several different products. Today, I'm going to analyze the company and see if the company is worth their stock price, frankly. They are trading up. They've been doing really well in recent years. And I wanted to see if I look at their cash flows and I look at their earnings per share, does it equate to a value per share, either higher or lower than their current stock price? I'll be sharing that with you. I'll share my analysis as I go through it for Amazon. Now, let's get into Amazon. Let me tell you more about their business and get into the fundamentals, my valuation, and then my conclusion, which includes my plans to buy the stock or stay away from the stock. Amazon is another American success story. Jeff Bezos started the company at the beginning of the internet revolution and started with a bookstore, but then grew the company to sell other products really successfully. They went from trying to be relevant to now really commanding online and retail revenue and that whole industry and economy. They have branched out and now they do infrastructure as a service through AWS. They also do video streaming through Prime Video. It's just a world class company. And I just can't say enough good things about the company. One of the things that I dislike about the company is it seems that they're in a lot of businesses and it's hard to focus on one or two or three things to do great. But it seems like Amazon does everything well. But now that their founders left the company, will that obsession continue? I don't know. It seems like every business loses their edge once the founders are leaving. And they lose their edge typically when they do too many things. You can look at businesses that were just so dominant and over time they lose that dominance. Oftentimes it's because they diversified too much. The other thing I haven't liked about the company in the past is that they have to invest so much capital into their business to make it work. They are obsessed with their customer, which is a really interesting thing about them. But that obsession leads to just a lot of capital having to be put into the business. Now, I tend to value companies based on free cash flows. And when you have to put that much capital back into your business, it doesn't free up cash. So it's a less valuable business, in my view. But overall, Amazon really does have a lot of momentum. Right now, their stock's going up. I think it's being fueled by the AI craze. And everybody knows AWS is the biggest infrastructure as a service player out there. And as the biggest hyperscaler, they're going to be able to support companies that want to build out their AI applications, large language models, and so forth. So they're going to benefit from that. Now, I happen to think that AI is going to be a one time build, maybe for a couple of years, and then we'll see what happens. For all I know, it continues to grow, but I think we're going to have a pause in AI in a couple of years where businesses really look at it. I think there's going to be some businesses that lose a lot of money, frankly. There are going to be some businesses that do create something interesting. Well, the investment will go towards the interesting projects, the things that are going to make money. And when we looked at the internet, if you looked at the early internet companies, none of them are around. In the early days, Amazon wasn't really a player. It was all these companies you probably don't hear about at all. America Online, as an example. Yahoo used to be super powerful. Now they're pretty much nothing. So a lot of things will change in AI over the next couple of years, and we'll see truly who's going to win or lose. I think Amazon is benefiting because their infrastructure is pretty hot right now and well deserved because they built that business and they're the leader. So those are my comments on the company. I have huge respect for them, but every time I value Amazon, I tend to come up with a lower number than expected. It's mainly because they have to put so much capital back into their business. Let me review the fundamentals of Amazon. To begin with, it's a very large cap company at $1.85 trillion. It's one of the magnificent seven stocks, and it's really grown its market cap. Its revenues are 575 billion per year. So you're paying roughly a little more than three times revenue for its market cap. They have strong net income, and their PE is 41. Their forward PE, which isn't too bad. They are a growing company, so the PE looks okay. As I look at the analyst ratings, it's a strong buy. But even when I look at analyst reports, many of them value the company below their current stock price. By the way, they've been on a tear upwards in the last year, and that's really, really great. But if you look at the 5 year, you actually see that not too long ago, and actually it shows here, you could have bought Amazon for like $86, $87 a share. I bought somewhere near that trough, and then I ended up selling my shares in around this point here, and I took a really good gain. I thought that, the company at that point was overvalued, and I missed out on the remainder of their upward trajectory that was really caused by the AI craze. Now, I took a nice gain, but it's still a bitter pill to swallow to see a stock that I sold, and it was a pretty good size position, continue to go up. I feel like I left a significant amount of gain on the table, but hey, that's investing. So overall, the fundamentals for the company are really impressive. Now let me look at the value of the company that I'm going to calculate with my model. I'm going to value Amazon by looking at the free cash flows I expect the company is going to produce in the future, discounting those free cash flows to today's value. I'm also going to look at their earnings per share and try to value the company based on earnings per share, and then blending those two valuations to arrive at what I believe is the value of the company. So cash flows for Amazon have been a little tricky over the last 3 years. 2021, they had negative free cash flows because they put so much capital back into the business. And 2022 was much of the same. In 2023, they did have very good free cash flow. And I'm using 2023's figure plus their growth rate as a good starting point. Now, they could go back to that heavy investment period and they would throw this model off. But I decided to go with what I would consider an optimistic viewpoint on the company. Now, I'm only going to look at cash flows from operations and the growth rate there. They grew 35% over the last 3 years. And the reason I have to do that is they had negative cash flows 3 years ago, negative cash flows 2 years ago. So you can't get a growth rate when you have negative numbers like that. The revenue over the last 3 years has grown 11%. Just really impressive how quickly they're growing their services, by the way. So for years 2, 3, 4, I'm going to grow the free cash flows by 15%. And then long-term growth will be 4%, which will be in the terminal value. So here are all the free cash flows I expect the company is going to produce in the future. I'm going to discount those free cash flows by 8%, a nice weighted average cost of capital for Amazon. And I get an intrinsic value of all those free cash flows of $1.1 trillion. I'm going to add the cash on their balance sheet, which is close to 87 billion, and take away debt, which is 58.3 billion. And I get to an equity value of $1.1 trillion. The market cap for the company is 1.85 trillion. So the company is trading at a premium of 37% if you discount their free cash flows. Again, I'm looking at free cash flows, and I would say with an optimistic viewpoint, the company historically has had many years where they actually have negative free cash. So I'm expecting that they are going to continue to produce free cash flows like they did in 23, and stick to that analysis. Now, earnings per share look good for the year. I'm going to use a high PE of 50. I think it's a great company that's growing. That's a stretch to go to 50, but I'm willing to go to 50 for an Amazon, especially since they have a lot of momentum with AI. And based on the earnings per share and the PE ratio, I get a per share value of Amazon at $157 per share, but the stock's trading at 174. So there's a 10% premium you'd be paying on Amazon if you just valued based on earnings per share. When I blend the two, I get to 28%. I put more weight on free cash flow method. But overall, Amazon, based on my model, is selling at a premium, which is what led me to sell my stock in 2023, frankly. These numbers are pretty optimistic. The numbers that I used when I sold my stock in the late August timeframe, actually showed that the company was worth less than this. But that's why I do my homework, is so that I can have a value on the company and I can make decisions for myself on where the company is worth. So let me recap my review of Amazon and then make a decision whether to buy this stock or stay away from the Amazon stock for now. First, with the company, I first I want to put myself in the seat of a business owner. Do I want to be a part owner in Amazon? Do I think their industry is good? And is their management team operating the company well? The answer is absolutely on all accounts. The company is really special. It's a great company. So it's yes to that. Their balance sheet is less than 3 times EBITDA. Their debt is less than 3 times EBITDA. Their balance sheet is high quality. They could issue out debt at a very high quality debt rating. So their interest rate would be lower. So overall, strong balance sheet for Amazon. They are selling stock at a premium for Amazon. And that is a showstopper for me. I'm willing to buy a great company at a fair price, but I feel that the premium on Amazon is just too high. So I will not be a buyer of Amazon stock. As mentioned, I sold all my shares. It was a pretty big position and banked that gain in 2023. Amazon's a great company and they really obsess with their customer. They provide just a lot of value basically to the economy. And I think they're going to continue to get more competition from the likes of Alibaba as well as other players that are going to come into the space. The AWS business is also getting a lot of competition as well. We'll see how that plays out. I figured that Amazon got as big as they are because they're great and they're probably going to beat their competitors, but they will continue to have to do that. We'll see how much capital they have to put into their business. That really affects my valuation because you could have a business that's really grown their revenue, but if you have to keep, in essence, rebuying the business every couple of years by reinvesting in capital, then the business is not as valuable as a business where you don't have to invest a lot of capital. You look at other businesses that Amazon is compared to, and they don't invest anywhere near the amount of capital that Amazon has to invest in their business. It's all those trucks that deliver the packages to our homes. It's the warehouses, and when it comes to the infrastructure as a service, the hyperscaler business, they have to buy a lot of gear to put in their data centers in order to provide those services. So we'll see how that sorts itself out and where Amazon ends up. In any event, I cannot imagine the future without Amazon being part of it. They are just a great company. And it's just the trick to investing is buying great companies at the right price and then making money. And that's what I'm trying to do in all of my investments. I appreciate you watching, and I hope you found my video interesting.